Hello and welcome. We are at KPMG's IFRS conference in Mumbai. Jamil Khatri, Deputy Head of Audit at KPMG India. Thank you so much for joining us.
Thank you.
What excites you about IFRS?
I think it's something we've been talking about for very long, and first of all, it's very exciting if it happens this time around. Second is the ultimate goal of IFRS is to make the financial statements more credible to the readers and investors. Foreign investors particularly are very interested to see a set of standards which they are comfortable with. And I think this is going to make Indian financial statements much more user friendly. That's the first thing. We'll see a lot more disclosures and hopefully that can lead to better investment decisions. At a professional level, I think this is a great opportunity for professionals to upskill themselves to a skill set which is more global. I always give this example of the business process outsourcing industry. If we have a platform which is on IFRS, imagine the kind of outsourcing work we can do for the world. We can become the world's back office on accounting and reporting much better than what we are doing today. So a bunch of opportunities for everybody on IFRS.
From the man on the street's point of view, the common investor,
Sure.
How will things change?
I think for a common investor, again, this, a part of the same logic applies, which is if investors look at financial statements, which they should, earlier there were many ways of dealing with financial statements. Just as an example, if a company acquired another company and there was a bad acquisition, you could always hide that by going to a court and getting the write-off adjusted through your reserves. It doesn't show up in your EPS, which the investor looks at. Now that choice goes away under IFRS. So if you made a bad acquisition, that will show and hopefully that will reflect in your investment decision.
Will that also mean that Indian companies might see more money coming in as far as foreign investments is concerned?
I think, as I said earlier, the key is the credibility of financial statements in India goes up. Institutional investors are not very good in trying to understand what is the difference between one national accounting framework and another. So if they see a framework which is on IFRS, it will definitely give them a lot more comfort. A good example would be what happened in Korea, South Korea many years ago, where companies that prepared financials under South Korean GAAP suddenly had a big meltdown, and it turned out the numbers were not accurate, and that prompted South Korea to move to IFRS. Now we're not in that situation, but it can only help in building credibility for the foreign investor.
2 or 3 things that you see Indian companies doing as far as their preparedness for IFRS is concerned?
Yeah, I think the good news is that a lot of companies have done a lot of preparation way back in 2011 when this was first threatened on us. I think companies need to pick up the threads. Many companies are looking at their plans again, but companies are waiting for the regulators to come up with something more concrete than what they have come up till now. People have started brushing up what they may have done earlier, looking at training as an option for people, but there's still a lot to be done.
What is the single biggest challenge in implementing IFRS in India?
I think the one big challenge I see is I still do not see full regulatory clarity on where we are going. What I mean by that is it's easy to say you'll implement a set of standards from April 1, 2016, and that the income tax impact have been thought through quite well this time as compared to the last time, but there are there's a big impact on other regulations as well. So the ability of a company to pay dividend, how will that be impacted? What is the impact on sales tax or GST when it kind of comes in? I think there is a lot to be done on the regulatory front, which I think is a core challenge. If we do not sort that challenge now, we will be close to April 15 in the same position we were in April 11.
On a scale of 0 to 10, how would you rate the carve-outs from the IFRS?
0 being kind of minimal carve-outs and 10 being the highest. I think we are at 2 or 3 now.
Okay, and in terms of the skill sets required, what is the scale that we are talking about, at least in a country like India?
I think the skill set development, I feel, is the responsibility of 3 key stakeholders in this country. One is institutes like the ICAI, which have to get the curriculum amended as soon as possible to bring in the new standards, so that by the time we get to April 15, we have people who are conversant with that. Second is private training organizations have to get into the act to reskill people, because we have a huge pool of accountants, who know current Indian accounting. How do you upskill them? Companies will need to do their bit to train people. And lastly, I think regulators need to understand the new standards as well. Just as an example, in the banking sector, Reserve Bank of India inspectors come in and look at financial statements and issues at banks. Unless they understand these new standards, it's unlikely they will be able to do justice to what they have to do. So capacity building will take a lot of time. I think if we start now, we may just about get there by April 2015.
All right. Thank you so much for
Thank you
joining
very
us.
much.